Much has already been discussed regarding the upcoming changes to value-added tax or VAT. Let me briefly outline the key amendments and what they could mean for the economy, businesses, and investments when they come into effect from 1st of July. The VAT Amendment Bill introduces three key changes: reduction of the VAT registration threshold, VAT on digital services, removal of Social Security Contribution Levy or SSCL on financial service sector and its integration into VAT. Firstly, the VAT registration threshold will be reduced from 60 million per annum to 36 million. This means smaller businesses with daily revenue above roughly 100,000 will now become liable for VAT. While this aims to broaden the tax base and reduce tax evasion, it could increase compliance costs and reporting obligations for smaller businesses already facing rising costs and intense competition. As a result, this may place additional pressure on goods and services prices, adding to inflationary concerns. Secondly, the bill proposes VAT on non-resident digital service providers such as Netflix, Spotify, Microsoft Services, and Uber. However, VAT will not apply where the recipient is a VAT-registered business entity subject to documentation requirements. This proposal is expected to create a more level playing field for local digital service providers, with Pygmy seen as a potential beneficiary in the ride-hailing and platform space. However, this may go against the government's policy of promoting digital economic activities and could potentially discourage such activities to an extent. Thirdly, the bill proposes removing the 2.5% SSCL from the financial service sector, that is mainly banks, and incorporating it into VAT, increasing VAT on financial services from 18% to 20.5%. Overall, the impact is expected to remain broadly neutral, although outcomes may vary depending on institution-specific factors. On the positive side, government buying officers registered under the Industrial Promotion Act will qualify for zero-rated VAT when services are supplied to overseas buyers and payments are received in foreign currency. This is expected to benefit exporter-oriented apparel companies such as Hella Apparel Holdings and related service providers. The bill also grants VAT exemptions for supplies made to businesses of strategic importance under the Colombo Port City Economic Commission Act. Potential beneficiaries linked to Port City and construction-related developments such as ACL Cables, Tokyo Cement, Sierra Cables, and other construction-related companies. In conclusion, the VAT Amendment Bill is expected to broaden the VAT base, strengthen tax administration, and improve compliance while creating both challenges and opportunities across different sectors of the market. For more insights like this, make sure to follow Capital Trust Securities.